Good afternoon. Welcome to our weekly livestock market update. I'm news anchor reporter for Brownfield, Meghan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Hey, good afternoon, Megan.
Last week we talked about the market looking for a direction, and this week it found it. Although I'm assuming this is probably not the direction we really wanted to see it go.
Well, I think we continue to look at what's going on in the markets, and I think all along as we've gone through 2016, we've talked about the issue of more supplies in many of these markets and the effects it's had on prices. And unfortunately this week, I think we're finding the supply side of the equation is winning out, and we're starting to see some lower prices. You look at markets this week, feeder cattle off $4 to $8. Futures for feeder cattle were also down. It's kind of remarkable that we lost ground on the feeder cattle side of the market, yet corn futures were down this week as well. Those things don't move like that very often. Hog prices down another dollar, cash markets relative to a week ago. So, the idea of growing meat supplies, unfortunately, seems to be the mode. And you look at where we're at, and we're pretty much through the buying for the Labor Day weekend. So, I don't know that we're going to get a big pop coming from that, since I think most of those purchases have already been made as well. So maybe the news not as positive as we've seen for a while.
Scott, we keep talking about a place to put all of this product, and this week we've heard, and in recent weeks we've heard that TPP is not going to come up in the lame duck session. As we look at that, how nervous does that make the livestock market, and how nervous should livestock producers be if we can't knock down this trade agreement?
Yeah, so I certainly think things like TPP matter a lot in the long run, and I think when you look at where consumers of U.S. meat are going to be in the future, and where are the growing parts of meat consumption, or U.S. meat consumption in particular, it's going to occur outside the United States, and so we certainly have to get those trade barriers down. I worry generally when you think about what's coming. I take pork, for example. We've been excited about the new slaughter plants that are coming on, and absolutely we should be. But we also have to deal with that pork that comes out the other side of those slaughter plants. And I think many of us feel like that the home for that additional pork is going to be international markets. And getting more open access to many of those important markets is going to be critical as we look ahead, because I don't think we're done supplying more meat in general in this country.
And looking outside of TPP, we've been talking about TTIP as well. Does that also put additional pressure going into 2017 if we can't get TPP wrapped up and with a pretty little bow on it?
I think the only thing that could save us in 2017 would be, Megan, if we saw some softening of the dollar that gave us some help. But one of those two things need to start to happen, I think, given where meat supplies are going to be. Now, I continue to say a successful TPP is that long-term investment. It's what we're going to do today to make certain that 10 years down the road, we have access to additional markets we don't have today. That short run effect is really, is there something on exchange rates that might be helpful to us? You can look in places like China and go, okay, if the Chinese decide they're going to buy a lot of pork or buy a lot of beef, those kind of market moves could really be helpful to us. Pretty hard to predict at this point in time.
I hate to continue to be on a negative note. Cold storage numbers came out from USDA this week, and that really wasn't showing any positive support to it either.
Exactly. We continue to show more product in cold storage. We're about 2.4 billion pounds of beef, pork, chicken, and turkey that we have in stocks today. That's just up to 2.8% relative to a year ago. I tongue-in-cheek a little bit. Relative to the 5-year average, we're up 10%. Now, that tells you we have some overhang on the market as we look ahead, and certainly doesn't spell a lot of good news in terms of short-run supplies we got in the freezer that could come back on the marketplace. So, I hope we're beginning to send the message that these markets certainly have a lot of reasons to be pressured as we look ahead.
We talk about the numbers, the reports, and these places for these products. How does that relate back to our producers? What do they take from this and figure out how to maybe manage their operations to break even or to hopefully even see a profit?
Yeah, so number one, I keep saying we need to stay current. The idea that we're going to wait another week and prices are going to rally, that's a sure way to keep prices lower for a longer period of time. More weight on those animals as we move ahead puts more beef and pork out there than we would otherwise have. So we certainly need to stay current generally in the marketplace. In terms of what folks can do, I wish I had a really simple answer for that question, but I will say all the time, Megan, we really have to look at the cost side of the equation and carefully look at the cost side of the equation. You notice I didn't say we have to cut cost. Cutting costs comes at usually an expense in terms of output. And so you have to understand if I'm going to use or I'm going to cut pasture, or I'm going to cut fertilizer use in pasture, I'm probably going to have calves that weigh less because I'm going to have less forage available for those calves. So you got to balance what that cut in output might look like. So it's not just simply cutting costs, it's understanding what costs can I maybe be reduce without having big effects on my revenue side of the equation at the same time.
Consumer sentiment hasn't exactly been real positive either.
That's right. So despite a stock market that remains at or near its highs that we've seen so far in 2016, the news we get out of University of Michigan on that consumer sentiment index is negative for August. We're talking about current economic conditions down about 2% relative to a month ago. If you look at expectations, although we're up in August relative to July in expectations, the year-over-year change is down 5.6%. So it begins to tell you that folks are worried as they look ahead. Now, hopefully we don't realize that, but even the current situation index has shown some negative, and that's probably not good news in terms of getting U.S. consumers to eat more beef, pork, etc.
Do we also need to prepare for the winter months as we see less the grilling season go out of, not in our house, but for the most part, the grilling season shut down for the winter?
Yeah, I think, when you look at where we're at, we're already pretty much got everything bought we need to get through Labor Day. So one of the last hurrahs, if you will, for the grilling season will unfold here. It's difficult to see us getting much pop left in that side. So now we're going to deal with how do we get through the winter, and it's probably a situation where supplies of meat continue to increase. Consumers not maybe quite as interested in grilling product as we were a few months ago. All these things to me, again, keep pointing to more pressure coming as we move through the year. And in particular, I'll come back to talk about pork here for a little bit. We already talked about a number of weeks where we'd be very close to slaughter capacity. Some of the current data that we're beginning to see in terms of weekly pork slaughter worries me about what happens once we get into November, December. We're already talking about pushing slaughter numbers on a weekly basis above what many would have thought a few weeks ago. It's above what really we got out of June hogs and pigs in terms of what was going to be coming to market. So some question about whether we're pulling a lot of hogs forward or we have more hogs than we thought we did. If it's the latter, then there's a lot of reason to be concerned about where we go as we go through the end of 2016.
Scott, one last question for you. We've seen some depressed egg and dairy prices recently as well. Really kind of a negative note today. I don't think we've had a ray of sunshine anywhere. But as we talk about that, USDA made some purchases. How does that help support those producers and those prices as well?
Yeah, absolutely. I think when you look at both eggs and dairy in particular, it's been a tough year. Dairy producers have seen prices that have fallen 40 or 50%. You can say the same thing for eggs. In some cases, we've cut egg prices in half as we've gone through 2016. So the idea that we can get USDA to move some product as long as so most of that product's destined for consumers that probably otherwise wouldn't buy product. So a lot of product provided to low income or needy households. As long as we don't displace a lot of commercial disappearance with those buys, we'll get a little pop out of markets as a result of USDA participating. I guess I just don't want to overemphasize, what kind of price strength we get, although those are millions of dollars that we're spending in both cases. Relative to the overall size of the market, it's a pretty small piece of the overall mix. So we will get some help there on prices, I think, in both eggs and perhaps dairy as well. But we shouldn't overemphasize how much price strength there'll be.
Scott, good to see you this week. Anything else?
I think we've covered it all. Hopefully next week we can be a little more positive, and we'll get something out of markets that can be helpful.
I hope so. Have a great weekend.
You do the same.
To have our weekly livestock market update delivered directly to your email box, make sure to subscribe to our newsletter at brownfieldagnews.com. I'm Meghan Grebner for Brownfield.